Jyotika Bedi, your host and founder of Happiness is Love. Biz World Unplugged is a series that brings together industry leaders for insightful chats, delving into key business trends and innovations. These sessions offer a sneak peek into the larger Biz World Ventures Conference. When is it scheduled? Scheduled for December 27th, 28th in New Delhi. Each episode features thought-provoking conversations, valuable lessons, and actionable insights from experts, setting the stage for the main event. Today, I'm very happy and excited to host Tushar Kansal. He's a highly accomplished professional, a thought leader. Welcome, Tushar.
Thank you so much, Jyotika, and thank you the entire team, Gayatri and Ichita and at BizWorld.
Tushar is the founder of Consultancy Ventures. I absolutely love the word. It's so creative, well done. Strategically, it's excellent. Over the years, Tushar has supported companies and investors in diverse sectors. He helps by the means of venture capital, SME, main board IPO, debt, consulting, and strategic services, leveraging 450 plus investors and lender connections. Wow. The range of deals are from anything between USD 1 to 50 million. Well done, commendable. Tushar contributes to a portfolio of 360 plus startups in 60 plus countries. With Loyal VC, the INSEAD-led Canadian VC fund, as their venture advisor. His expert opinion is often sought by leading channels, publications, more than 500 talks, and he's also done a TEDx. My first question to you is, what are the key stages of funding a startup from its inception to IPO, and how does each stage impact a startup's growth strategy?
Thank you. This is a very deep question. So when we start, we are at the idea stage, and we are looking for some problem to solve. And, we look all around us, we see, where people are getting stuck. Is it because of some product which is not available or some service which can be made available? So we are at the idea stage. So at that stage, if we know the problem which we are wanting to solve and we design a solution around it, then that is the idea stage, seed stage. And at that stage, the technical risk is the highest. And at that stage, we have to look for friends and family, people known to us, our professors, our friends, who can give us some initial capital. So that is the first stage. The second stage is we design a minimum viable product and we test it. And then we reach the PMF stage, product market fit stage, where the product we start selling and we try and understand whether this product has a market or not. That is called the market risk stage. And at this stage, we look for pre-series A or seed capital. And at this stage, there are maximum number of investors who know that the product has a final shape and it has a market as well, and it is selling as well. And there at this stage, you will find the maximum number of investors who would like to give money for marketing of the product, so that the money straight away goes into marketing and the product starts selling and it gets a lot of revenue, and straight away the valuation of the company grows up. The next stage from that is Series A, where the risk is maximum for go-to-market, GTM. Here is a product which has shown that it can sell, but how you bring that product to the market. You would need salespeople, you would need marketing money, you would need to design the GTM in terms of whether offline or online. And if you're going to use online, then how much spending you will do on Insta, Facebook, LinkedIn, Twitter, WhatsApp. And if it is offline, then whether you will be going through distributors or you will be directly having your people on the ground. So this is the GTM risk, which is the maximum at this stage, and funding is available for Series A. Beyond Series A, the product has already sold. There is a good revenue of the company, but now the fixed costs are there. The salaries are going, the office expenses are going, but you need to increase the market to get more returns on the fixed cost. So that is when the risk is called TAM, total addressable market expansion risk. Here you want to increase the size of the market. So here you need Series B, Series C, money in excess of millions of dollars, $50 million, $40 million, even $100 million. And once your entire company and the product is set, and now you want to be a company which critically looks at the market, analyzes what more can people want, and then design those products. So you want a culture in the company, of a strategic culture of identifying potential further pain points, problems, and bring solutions in terms of products and services. That's when the culture risk is the highest in the company. The company should have a strategic culture where people work in the startup mentality, as less bureaucracy as possible. And here you get money in terms of Series C, D, E, and all the way to IPO. So this is the whole funding stage. India, a lot of options are available for funding. People are very matured after seeing Shark Tanks, and people are, they know what funding is. They know a lot of terminologies associated with funding, and this is how it looks like.
Your communication is very crisp and very clear. And I love your business communication skills and that you're such a helpful person. World needs more people like you.
Thank you. Thank you so much, Jyotika.
My second question to you is, what are the common challenges startups face in securing early stage funding, and how can founders overcome this obstacle?
Well, what happens is that you tend to meet a lot of people, and every time you meet people, you see that, okay, this person is an investor, or this person works in a particular company at a senior level. You always get hope that this person will fund you.
Right.
But actually, you need to understand the investor's mindset. He's putting in money in your company, and he will be associated with your company for minimum 3 to 5 to 8 years. So people look at investment opportunities very deeply. And trust is a big factor, because I give you money, and suppose you take it out, you don't utilize it properly. So trust is a big factor. That is why, as I said in my previous reply, that you want to take money from people who trust you, who will stand by you, maybe put in more money in the future. So friends and family, your professors, your clients, your ex-clients, your ex-colleagues, these are the people who will bet on you, who will give you money. Apart from that, in India, when we launched Consultancy Ventures in 2016, there were only 416 startups registered with the Government of India in the Startup India scheme. Today, there are more than 130,000. So, there are pitching sessions, there are angel networks. We at Consultancy Ventures, we facilitate companies getting access to accelerators, incubators, and so you should be prepared to answer each and every question of the investor, and you should understand all the terminologies. You should understand what unit economics is, what term sheet is, what are the clauses which you can sign or not sign. If you would have seen just 2 days back, the promoter of Boat headphones is fighting with Westbridge. That's a company which owns 44% in his company, because in one of the agreements, shareholders agreement, he had signed some clause. So you have to, what we do is we give an investor starter kit in which we make them founders aware of all these things. What are the clauses in the term sheet, the shareholders agreement, what is unit economics, how can you present your business plan in the best possible way. And we bring a level of trust with the investors who stay with us, because they know that Consultancy Ventures will help in the right spirit, and also in a ethical and efficient manner.
Wonderful. That takes me to my last question. What are the risks and rewards of going public via an IPO, and how should a startup prepare for this transition?
Well, if you would have seen nowadays, the SME IPO market has opened up. There
Yes.
are almost 50 IPOs happening every month on the NSE Emerge, which is the SME exchange. And you will see a lot of companies which maybe your relatives used to own, and
Yeah.
they never got capital because they were
True.
SMEs, small and
True.
medium enterprises. So what has happened is that the government said that, okay, let us open an entirely new platform just to raise money for these SMEs, small and medium enterprises. And so NSE emerged, and in BSE also a platform was set up. But the investors were used to only funding large companies, and in the initial years on the NSE emerge platform, issues used to come, IPO issues, but the funding was actually done by close relatives of the founder and not by the
Right.
market investors. So, but now the market has matured. If you look at the number of times the IPOs are getting subscribed, I am an independent director with GP Eco Solutions. That's a company which raised 31 crore 4 months back. And on an IPO size of 31 crore, the total amount of bids placed by the investors was 16,600 crores. So a
Wow.
31 crore IPO had a demand of 16,600 crores. So
Incredible.
you can, yeah, so you can imagine the kind of need there is in the market for quality IPOs. And people are, the market is 82,000 Sensex. It is lifetime high. The mutual funds are sitting with 30,000 crore worth of money of their investors, and that money is waiting to be deployed in the stock market. So whenever the stock market dips a little bit, some correction comes, immediately the mutual fund guys start putting the money. So the market never gets a correction. So everybody is
Mm.
making money, everything is going up. It is a kind of a disclaimer is that it is kind of a dangerous phase as well, because every stock is going
Mm.
up. But
Correct.
at the same time, this is a golden opportunity for small and medium enterprises to finally get equity capital, get yourself listed on the NSE Emerge, and raise money. And I can give some small guidelines for companies who can raise money. Your net worth should be minimum 5 to 7 crores. Your net profit, the actual profit on which you will pay tax, it should be minimum 6 to 7 crores. And
Okay.
the valuation which the investor will give you, we are networked with all the anchor investors in SME IPO market. The valuation which the investor will give you will be in multiples of net profit. So you have to be
Mm.
a profitable entity. Although there are companies getting listed which have losses as well, but we find that the investors are more comfortable with profit making
Mm.
companies. And we have been facilitating a lot of SME IPOs. Right now also 9 IPOs had come which had our inputs, and we facilitated the pre-IPO and the gray market and the IPO listing, then the post IPO, then the follow on public offer. So we facilitated all the 5 stages. And any company which feels that they are getting stuck because the investor put in money in their company, but the investor is not able to find an exit. So let me assure you, if your company has a good growth potential, you are going to grow very nicely and profitably, then the IPO market is the right market to list yourself and give an exit to the investors who are sitting on your cap table. So this is about it, and I'm available on WhatsApp and email. It is given on my website consultancy.com, and happy to answer all your questions if you reach out. I'm also available on my LinkedIn. If you find my name Tushar Kansal, there are not many Tushar Kansals. So, so I can be reached out accordingly. Thank you.
Thank you for your support, your encouragement, your time and energy. And I hope this talk has provided invaluable insights into the critical stages of funding and how they shape a startup's path to success. I would encourage you to register for the main event by visiting the BizWorld Ventures Conference website. Thank you, everyone. Keep smiling, keep shining, and keep inspiring.
Thank you, Jyotika. Thank you, everyone, the team, Gayatri, Ishita, and everyone at BizWorld. Thank you for having me.
It was really fun. And Tushar, you have to help me because at Happiness is Love, we're trying to solve the world's biggest problem, which is parenting.
Wow. So, let me tell you, as a father of two children,
Hanji.
let me tell you, growing happy, confident children is a full-time job.
Yes.
And Jyotika, you are bang on there that happy parents make happy children. So you have to treat happiness as a choice, not
Yes.
as an afterthought. And try and handle situations and some pains which you are facing in such a way that your happiness does not go away.
True.
And definitely, I will recommend your services, Jyotika, as well. Your products, I had a chance to see them, and
So sweet.
awesome,
Thank
really
you.
good work. And I would recommend to all my friends and colleagues out here.
So sweet. I look forward to meeting you in person, and I'm sure we can do great things together.
Thank you. Thank you likewise. Have a good day.
You too. Thank you, everyone.